Good morning, everybody. This is Logan Long from Symmetry Financial Group. Thank you so much for tuning in to today's training webinar. We are very excited to have Lafayette Life hosting for us today. They're going to give us a background on their company and get into some of the wonderful whole life products that we have available now in our portfolio. So just for some housekeeping things, if you've attended this webinar before, you're welcome to type in questions at any point. And if we don't get to your question, we will definitely follow up with you afterwards through a report that we can pull through GoToWebinar. So I will go ahead and pass things off to Brandon to get things started. Thank you so much.
Hey, thanks, Logan. My name is Brandon Hamilton. I just wanted to say thanks, everybody, for letting us join you today to talk a little bit about Lafayette Life. I am joined today by your internal wholesaler, Dina Evans, and the manager of our sales desk here, Bobby Kincaid. I just wanted to turn this over to Dina just for a few seconds to let her say a few quick things. So, Dina, would you mind?
Hi, everybody. Thank you so much for being with us today. We are very excited to have you on board, and hopefully today we can start the process of letting you in on a lot of good information about Lafayette Life, what we have to offer, and hopefully get you a little more comfortable with the process. So after today, I'll be here to help you get up and running with Lafayette Life and help you through your first few cases until you get completely comfortable with our process and make sure you know everything from A to Z on how to submit and place business with us.
Absolutely. Thanks, Dina. I appreciate that. So like Logan was saying here, we do have a questions box. If you'd like to type some questions in, I'll have a little bit of review time at the end, so we'll get to some questions a little bit later. So if you want to type any questions you have in there, feel free to let us know, and we'll review those at the end. So what we like to deem here at Lafayette Life is what we deem the Lafayette Life difference. And one of the main things that sets us apart competitively are our ratings. So you'll see here we've got an AM Best of A+ Superior, a Standard & Poor's of AA very strong, a Fitch of AA very strong, and then we have a Comdex rating of 95. Now the Comdex rating is an aggregate of all of those letter ratings prior added up to a score of 1 to 100. And we feel that that 95 is a pretty good indicator that we're going to be here for the long haul. You might be wanting to know, how do you actually stand up in the marketplace here? So you're going to see that Lafayette Life, who we deem our competitors, and where we stand amongst those competitors here. You're going to see that our little company here of about 40 people on a 28th floor has a Comdex rating of 95. And that is up against big names like Guardian, MassMutual, New York Life, Northwestern Mutual, and Penn Mutual. So we've got that small company feel where you can give us a call directly. You can call everybody from Dina, myself, all the way up to our CEO, Brian Dunn. But we have those backings of a larger company. And we're actually a member of the Western and Southern Financial Group, which is a member of the Fortune 500, and we're based out of Cincinnati, Ohio. So you can actually go look up information on the Western and Southern Financial Group. We're a subsidiary of that company here. So let's get into a little bit here about how does whole life work. I understand that you guys might not be completely up to date on whole life, so let's get in just to some basics here. So we know that the basic building blocks of all life insurance policies are mortality, expenses, and interest. So let's hop into each of these in a little bit greater depth here. So mortality is statistical analysis on the number of deaths expected to occur in a given population. Nothing like covering death this early in the morning on a Thursday, but let's just talk a little bit about it, I guess, right? So the mortality table is split by age group and gender. And it's going to be considered the starting point for calculating risk. So the actuary department here has a big grid that they look at, that they actually use this to help determine the premium per thousand of death benefit on each given product here. And this is going to be the actual mortality table. And this is going to be what I like to deem the most uplifting page here in our presentation here, because it's how many people per thousand are expected to die, given if they're male, female, and if they're a smoker or a non-smoker here. So you'll see that we've got out of every 2-year-old, only 0.32 people out of every 1,000, if they're a male, are expected to pass away. And you'll see that that risk grows greater as we go along, all the way out here to about age 89, where about 157.86 are expected to die per 1,000 people. So they use these mortality tables to actually come up with the risk here. You might know that the industry is going through a big change here. A lot of companies are going to be releasing new products because we have to move to a new mortality table by the end of the year. So no longer will be the 2001 mortality table. It'll be the 2017 mortality table. Just a quick difference between the two. As you can expect, from 2001 to 2017, life expectancy has gotten greater. We're living longer through advancements in medical technology, so that's going to correspond with that. So you're going to see products that are probably going to purchase a little bit more death benefit per 1,000 here. We also have the exponential curve of mortality. This is that exact same thing, but it's going to be targeted in on a graph just so you can see based on mortality rates among males and females from 65 to 85 here. So the red is going to be the male tobacco users, purple will be female tobacco users, blue is male non-tobacco, and green is female non-tobacco. And as you'll see, female non-tobacco users over the course of that 20-year period here remain the lowest mortality group in the entire population here. Male non-tobacco users, we do pretty good here until we get to about age 79, and that's about the time that we all start to kick the bucket there, I guess you could say. That's when mortality kind of ends for us. And so that's when female tobacco users actually overtake us because they're going to live a little bit longer, even though they are tobacco users. And then finally, male tobacco users, unfortunately, right up there at the top of that mortality population. So if we talk about expenses, there's a couple different things we can do with expenses here. First, it's investment and management of money from premiums that we receive here. We'll talk a little bit about investments and everything when we get into dividends here. We've got the accounting and distribution of money, servicing of any claims that we have to pay out. We've got commissions and advertisement, one of everybody's favorite things here. And then we have policy filings and printing of policies. And then one of the last things here is all customer service activities. So getting people like me on the phone and Dina on the phone, that's sort of that customer service activity expense there. And then finally, we've got interest. These are premium dollars that are not used for administration, claims, and mortality, are invested very safely. You're typically going to see them in real estate, and you're also going to see them in the bond market. If you ever want to see one of these, just what we're invested in, just let Dina and I know. We can run you what's called a vital signs report, and we can actually show you how we actually make up our investments here. Reserves, these are going to be short and long term. They must be met for statutory and state requirements. So we're always going to have a good amount of reserves set back here. The Western and Southern Financial Group, we're very financially strong. We're very financially stable. And so you're going to see that we've got some pretty good numbers on our reserves option there. These are usually going to be placed in government securities, high-grade corporate bonds, commercial mortgages, and very little stocks and some real estate there. So let's talk a little bit about whole life just in general and how it works here. So this is going to be basically our Heritage 15, and this is going to be a diagram of really how whole life works here. So what I always like to point out here is you've got your level premium down here. That'll be starting right here, right across the screen. You also have the client's age. So this is going to be 40, age 60, age 80, and age 100. And then you're going to have what's going to be your cash value section. So this will be your guaranteed cash values. And this will be what's deemed the net amount at risk. So this policy is $100,000 worth of death benefit. So that's where you're going to see your policy face amount there. Over the life of the policy, the more premiums that are put in, obviously here in the very beginning, we're going to be offsetting a lot of mortality and expenses, but over time, this policy is going to generate a lot of guaranteed cash value that's going to offset that pure death benefit and net amount at risk. So by the time we hit age 121, which we in the whole life market, we all use age 121 as our endowment portion, where the cash value equals the death benefit, your guaranteed cash value and your guaranteed death benefit will equal $100,000 here. Now, there's dividends that will come into play a little bit later, but those are going to be non-guaranteed. So those will actually speed up this process of hitting that $100,000 mark here. But just note that age 100 is going to be our last premium. And then even though we're not paying any premiums, we're still going to generate higher cash values and death benefit after that last premium there. So that'll work with all of our products like that. So when we talk about dividends, how does Lafayette Life determine the dividend scale? I'd be amiss if I didn't give you the one quick piece of advice that our compliance department says is that dividends are not guaranteed, but we have paid a dividend every year since our founding back in 1905 here. So our interest factor is our first portion here. So the company's investment earnings in excess of the guaranteed rate calculated on the reserves backing of the policy values. So if we do better on our investments, we're going to have a little bit more money to give away for dividends. Mortality factor, if less people die in a given year than we've actually projected for, we're going to have more money for dividends. The same instance, if more people die than we've actually experienced, we're going to have less money. But our actuaries take that pretty serious, and they like to try to get right down to the nose there. Then finally, expenses. We keep our expenses low, and they don't send Dina and I out on the private jet flying around drinking a bunch of fancy champagne and having shrimp cocktail everywhere. We're going to keep our expenses rather low. So there's going to be more money available for dividends in the client here. So that'll equal out the amount available for dividends. One thing I always like to talk about with dividend scales and how they're calculated, it's going to be based on an average yield of all those investments. And it's not considered a rate of return. That's where the discussion I have with a lot of producers is they see dividend interest rates and they think that that's what the actual rate of return on the policy and rate of return on the dividends is going to be. That's not necessarily the case. The dividend calculation, the dividend rate, is actually a piece of a much larger actuarial calculation. So our 5.1 dividend rate gets plugged into this much larger calculation based on age, based on death benefit, premiums received, all things like that. And that'll actually determine how much dividend is actually there. So there's no way really to back your way into the rate. I've been trying for 6 years, and as a non-actuary, I haven't figured it out yet. There's also going to be no industry standard for calculations. There's a couple different ways to calculate dividends, and there's net and gross. We are net of all expenses and mortality charges there. There are other companies that are gross, so they haven't deducted for those expenses or those dividend charges yet. So a 5.4 dividend rate, if it's a gross rate, may be the same as a 5.1 that's net. So you're always going to want to work with your carrier to know, are they net or are they gross? So we're going to be, after everything's all taken care of, that's going to be what your dividend is, 5.1. Dividend performance is a question I always get here, and I always like to track it against the Moody's AAA corporate bond rate there. So over on the left, you've got this screen here that starts in 1990. Moody's was at 9.32. They're going to be represented by the blue line here. LafayetteLife's dividend rate was at 9.85. What have we known since the early 90s? What's been going on with interest rates? They've been hitting all-time lows there. But you can rest assured that Lafayette Life, we're very conservative with our dividend, and so we don't need interest rates to go back up as high as they need to go as they were in the 90s to sustain our dividend that we actually have here. So you'll see our Moody's over here once again goes all the way down to 2017, 3.78, and where we've held steady is 5.1. Now this is actually going to be updated in a couple weeks here to include 2018. That number right there is once again 5.1, and then our 2019 dividend scale once again is 5.1. So we've held steady since 2014 on our dividend rate. When we talk about dividends and investment yield, especially with comparison here, one thing I always like to point out is just the 5-year average investment yield. We have a 4.54 return on our investment yields. We have our net dividend of 5.1. So what is that actually saying? Like I mentioned earlier, we've got a good sustainable dividend. We're not overinflating it or pulling it from anywhere else in the enterprise with Lafayette Life. We actually are able to back our own dividend based on our investment yields here. You'll see that 5.1, that was our dividend in 2018, as well as our 2019 dividend of 5.1. You'll just see some of our other competitors there. So you'll just want to know how they actually rate their dividend, and once again, if it's net or gross, and if it's direct or non-direct recognition. And when we talk about direct or non-direct recognition, this will be something very important, especially if you're using this as sort of a banking style policy. One of the questions we always like to hear here at the home office here are, do loans affect dividends? Now, there's two schools of thought when it comes to dividends here. There's non-direct, like Lafayette Life, and then there's direct recognition. So direct recognition will charge an interest rate on a loan and adjust the dividend credited to the policy here. So they can actually give you a lower dividend rate if you have any money outstanding on the policy. Non-direct, like Lafayette Life, we're going to charge the same interest on a policy loan, but we're not going to adjust the dividend rate there. So we're not going to penalize your client if they're taking money out of the policy here. One question we always do receive here is, what's our current loan interest rate? Current loan interest rate on any of our policies here is 5%. That's a variable rate, and that's backed by that's taken in by the Moody's seasoned corporate bond rate. So that's how we actually make up our loan policy here. Just as an example here, this is a company that shall remain nameless. They've got a 6.34% dividend rate. listed out there on the marketing material there. That's for money that is not loaned out of the policy. So money has to stay within that policy there. And if they access their money through policy loan in the first 10 years, that dividend rate drops from 6.34 on that chunk of money to 4.35. So that's almost a 2 full percentage point drop in their dividend. And that's just basically, you've got $10,000 worth of cash value, you're borrowing out $8,000 to pay back some debts, anything like that, you're going to receive a lower dividend rate there. Lafayette Life, once again, 5.1, whether the money is inside the policy or if it's in your checking account, we don't care, you're going to get the exact same dividend rate. We'll jump into this in the illustration software, but first and foremost, I want to cover the Lafayette Life portfolio of whole life products here. So with this, we just want to talk about our actual whole life portfolio. We have issue ages of 0 to 85, and we're going to actually be age of last birthday. We're going to be one of the last companies that actually offers age of last birthday. So if you're 64 and 362 days, we do not care. You're still 64. We're not age nearest or anything like that. All of our policies are going to have a maturity age of 100, and the longest paying premium product is going to be the Heritage 15, which goes out to age 100. So you've got about 21 years there of differential there. These are going to be our dividend participating products. We do have a simplified issue. If you want more information on that simplified issue product, give us a call at the sales desk. We can let you know about that. And then finally, standard and above all include our ADBR Plus rider, which we'll touch on here in a little bit. Main thing to think about here is we do have 6 main whole life policies here. Dina, I'm going to ask you, if you don't mind, can you just come kind of go through this slide for us real quick?
Sure, absolutely, Brandon. The products listed here are in order of lowest to highest cost of insurance, reading from left to right. So when we are helping you design a case for debt reduction or early cash value, we're going to zone in on the Patriot, which is kind of our middle of the road product. So the Patriot there in the center, Patriot 15, does have an early cash value. It pays to age 75 or 30 years, whichever is longer. So with that, once we design the case, including the level paid up additions rider, which we'll get into a little later, that seems to produce a good cash value for clients looking to maybe do loans or withdraw in the early years in the policy, maybe years 1 through 10.
Mm-hmm. Absolutely. So we're going to be focusing when we get into the illustration software on that Patriot 15 product. Thank you, Dina. We do have some premium limits here that we want to cover here. Our single premium paid up additions rider, we do have a current limit of $3 million. And our total single premium Liberty, single premium whole life product is also $3 million. We do have that level premium paid up additions rider, which we'll touch on here in a second. Its current limit is $5 million on an annual level, and then over the lifetime, $3 million. So you might be asking yourself, what the heck is the difference between all these products here? We do have 6, and so they're going to basically be designed here on a male age 45 with $10,000 worth of premium, and you can see what the cash value is just base only at years 1, 5, 10, 15, 20, 25, and 30 here. Quick explanation here of this screen here. Red means that it's kind of fallen behind in cash value. Green means it's kind of a leader in the cash value at that given age here. So our 10-pay life, obviously, it needs to get it fully paid up within 10 years. Even though it drops to red here, we're still seeing very good cash value growth. And the only reason it drops to red is because we're not paying in any premiums after that 10th year here. So the main reason we're going to be looking at this Patriot 15 is because base only, you're going to have 30 years to really fund it. And after the 30th year, it's one of the all-time leaders there in cash value. So if you team it up with our level premium paid up additions rider here, you can really make these numbers here stand out to green. So you lead from year 1 all the way through year 30. So that level premium paid up additions rider gives you a little bit of additional premium, gives you some flexibility in design, and that increases your death benefit and your cash value. So on the minimum side here, we have $500 to start. That's what we have to have in year 1. So $500 or $41.67 a month to open the policy. Years 2 plus, we only need to receive $120 annually thereafter. So $120 or $10 a month to keep this open here. And this slide has not been updated, but $500,000 annually and a $3 million lifetime max here. So for every dollar you put into the LPUA rider, you're going to see about 94 cents go directly back into the cash value. So you're really going to build a lot in there. We have a really low fee on our LPUA rider. 6% is one of the lowest in the industry. We've got competitors out there that charge all the way up to about 16%. So our 6% is really, really good when you look at the industry as a whole. Finally, one of the last couple things we want to cover here is going to be value-added riders. We're going to cover two, and those are the two that we kind of deem the most competitive in the marketplace here. First and foremost is our Accelerated Death Benefit Plus rider. It's going to be automatically included on all whole life policies, and you're going to be able to access the living benefit of the policy. So this means that you're not just buying life insurance just for the death benefit. This is going to be something you can tack on with those banking style policies here, so the clients can also access their living rider if something's to come up. It's going to offer flexible options and durations, and we've got 3 qualifying events here. First and foremost, we've got specified medical conditions. This is what really sets us apart at Lafayette Life and Western and Southern Financial Group, is we've got these specified medical conditions that are covered. It covers things like AIDS, end-stage renal failure. We've got some life-threatening cancer on there, major organ transplants. So if you've got to get a new liver or lungs or heart, you can access some of the money out of here. Stroke, and then medical conditions requiring permanent or continuous life support here. Next, we've got chronic illness, and you can either qualify for this through you can qualify through this with 2 of those 6 ADLs. So a lot of the things that those LTC riders used to cover in the past, chronic illness will cover. Once again, those 6 ADLs are listed there on the screen here. And you can also go through cognitive impairment as well. That's also covered under chronic illness. Finally, we also have terminal illness, which is 12 months or less to live in most states. Just check with your Department of Insurance because some still do 24 months or less to live. So those are your 3 qualifying events here. Here's the formulas that determine each of those lump sum benefits. I am not going to quiz you on these because once you get into the illustration software, we have a very good report that shows you exactly what the client can expect to receive here. So I'm going to let Dina get into the ADBR Plus report once we get into the illustration software here. But just know that in our marketing materials, we lay all these out here. It's nothing that's hidden from the client. You don't need to get an actuary out with a magic wand or anything and work on something for 4 or 5 days. You know, we're going to show it right there at the very beginning. Here's what your client can expect. Gives everybody a good peace of mind. Just know that we do have a periodic payment available for chronic illness only. We just found that that's going to be a little bit different because chronic illness may require things like nursing facilities or home health. So we do allow a different payout amount that can be divided over 3 to 10 years. So they can actually receive this. The good thing about our ADBR Plus is that it's indemnity only. It's not reimbursement. So you can spend the money however you want. We don't need receipts. We just need to know that you qualify for it from a doctor. But once again, we don't need receipts from the nursing home, anything like that. If you qualify for it, you're going to receive the money. So those are a couple of what our reports look like. You may remember a little bit earlier about me talking about ADBR Plus is offered on standard and above policies. So we do give that for standard and above. That comes free of charge right away. We do have some instances where your clients may come off with a table rating or a substandard rate class. They don't walk away without anything. They still do get the terminal illness only. So they just lose out on the specified medical and that chronic illness. So they do still get that terminal illness. So they do get a benefit there. Last rider that we're going to cover is what we deem our most competitive in the marketplace here, and it's going to be our waiver of premium. It's going to waive premiums, a payment of premiums, including all riders except that level premium paid up additions rider, if the client becomes totally disabled for a period of at least 6 months. The reason we deem this one of our most competitive is because we have a true own occupation definition. When it comes to waiver of premium, there's own occupation and then there's any occupation. Own occupation means that if your client is a surgeon and they injure their hands and they can no longer perform surgery, but they can go to just since we're sitting right here in Cincinnati, they can go to the University of Cincinnati and they can teach. They can teach there still. They can teach how to perform surgeries and everything like that. Own occupation deems them disabled because they can't perform as a surgeon here. Other companies that are any occupation, Even though they can go teach, they would still be considered non-disabled because they can still perform any job in the U.S. economy. So even if they can go to a Walmart and be a Walmart greeter, if they can go to McDonald's and drop the fry bucket into the hot grease, they can still be considered employable. And so any occupation would consider them on the hook for those premiums still. Word of advice, we do start to see things like enhanced own occupation that are starting to hit the market. What enhanced own occupation, even though it sounds fancy, is it's any occupation in disguise. So it's own occupation for 2 or 5 years, and then it just shifts over to any occupation. Ours, once again, is a true own occupation. It's never going to change for the life of the rider here. A little bit about the specifications here. 0 to 60 is when we can issue that. It's going to cover underwritten amounts of $5 million or less, which we'll show you here in the illustration software, and it's going to be available through Table B. So Table B rate classes. So how it works is prior to age 60, premiums are going to be waived for as long as the insured remains disabled during the premium paying period of the policy. So if you've got a client who's 40 and they just signed up for a Patriot 15 that's made payable until age 75, and something happens to him at age 45, we're going to waive those premiums all the way through age 75 until they get to be paid up. Between ages 60 and 65, it works a little bit different. Premiums waived while the insured is totally disabled until age 65. Then at that point, there's going to be a couple other options we can take a look at. Maybe we might look at reduced paid up, or we might take a look at premium offset. But always give us a call at the home office. We can show you a couple different options here, so you're not left in the dark on how to proceed with your policy. Before we hop into the application process, I think it's important that we get Dina back over here to kind of walk us through the illustration software. So let me pull that up here, and while that's coming up here, we'll go to agent.loic.com, and we will hop into my login credentials, and here we go. So Dina, with that, I will turn this over to you.
Thank you, Brandon. Hopefully everyone's had a chance to take a look at our website and kind of peruse around. If not, we can make sure that we give you a quick tour over the phone. But for today, we're going to jump right into our illustration software. So our illustration software is web-based, so there's no need to do any downloads, no attaching to your desktop. Whenever you click on this illustration in e-application system option, just know that everything you select is going to be up to date, including the riders, dividend rates, interest rates, application information, rider information, etc. So once you click the illustration in e-app option, just go ahead and click the first green launch button. That's going to take you directly into the software. So if you have cases that you're working on, they're always going to be saved here in the View My Cases option. So for today's demo, we're just going to go straight to Start a New Case. And what we'll show you today is the typical solve for creating cash value when you're working with a client in a debt reduction situation. So I'm just going to enter kind of some manual client information. We'll use a 50-year-old female. We'll say she lives here in Ohio. And once I select my state and product type, this is going to do two things for you. So when you select your state, that's going to allow you to tell the system that you want all of the riders that are available for that state, plus all of the up-to-date application information. And of course, the product type is going to be whole life because we're going to illustrate a whole life product for this scenario. Once you click the Find Available Products option, it's going to load all of the products available in your state. So as an FYI, all of our whole life products are available in all states except New York and Alaska. So today I'm going to select the Patriot 15 that we discussed earlier. That's going to take us to the first page of your input screen, I'll call it. So this is where you can verify the client information, gender, date of birth, or age, and you can change the rate class. So we go all the way up to super preferred. Note that if your client is rated super preferred or preferred, the base death benefit has to at least be $100,000. So for today's demo, I'm going to select standard. Once that's in place, I'm just going to click the button labeled next. And that's going to take me to the solved option. So the software here at Lafayette Life is constantly being updated. And we heard our agents talk, so we recently built a new solve into the system labeled Base and LPUA Premium Blend. So from the information earlier, we know that LPUA stands for Level Paid Up Additions Rider. And we also know from Brandon's presentation earlier that base alone doesn't always generate the desired cash value. So we need that LPUA rider to kind of boost the policy. So I like to call that our cash value builder. So the combination of the two is going to be ideal for creating the design that you want. When you select that option, you can enter the annual premium. So even if the client is paying monthly, we're going to want to know what the annual premium amount will be here. So for demonstration, I'm just going to put a round number of $10,000. Now, if you're wondering what percentage to use towards your base and what percentage to use towards LPUA, the rule of thumb is the more that goes towards the LPUA, the better the cash value is going to be naturally. So typically, we want the policy to have a nice enough death benefit and an early cash value growth and a steady cash value growth from there. So a nice percentage to choose is going to be 35% towards base and 65% towards the level paid up additions rider. You don't have to worry about doing the math here because once you add your percentage to the base, it'll automatically populate the remainder to the paid up additions rider. So generally, when we're adding more of our premium amount to the cash value builder, the policy is in jeopardy of becoming a MEC. So we've already laid this out for you so that you can just follow the steps and avoid MEC right from the onset. You can choose a 10 or a 20-year term in order to increase the death benefit and keep it out of the MEC corridor. So the longer the client's paying will dictate how long your term duration will be. So for today, I'm going to pick a 20-year term. Once I've input all of my information, the last thing I need to do is tell the system how my client wants to pay or what premium mode they want to use. So I'm just going to click the next button again and just tell the system just on this area in the premium mode or the payment mode that I want to pay monthly. And from there, that's all we need to do. We have an option to view the illustration from the top or the bottom of the page. Either button will work. I'm just going to select the View Illustration button from here, and we'll see what we come up with. So our typical illustration is about 13 pages. So the first page I'm going to take you to is going to be our additional information page, and it usually shows up on about page 10 of each illustration set. So this is a very telling page, I'll say, because you'll be able to see exactly what portion of your premium went to what element of the policy. So here in the center, we see that of our $10,000 annual premium, or $833 per month, 35% of that premium is $291.66. That's what went towards the base. So that $291.66 per month purchased this client a total of $120,000 in base coverage. From there, the remainder went to the 20-year term. The system calculated the exact amount that's needed to avoid MEC. That cost the client a mere $26.52 per month. And then we have the rest going to our level paid up additions rider, which is $515. So this is a good ratio. This is exactly what you want to see. You want to see more of your premium or the higher dollar amount going towards the paid up additions rider and less going to the base. Because generally when a client is looking to gain cash value, they're not as much concerned with the death benefit as they are with generating high cash. You'll also see your 7-pay premium or your MEC limit, and you'll always see the underwriting requirements that are going to be required to underwrite this case. So you'll always be able to tell your client exactly what they're going to be up against when it comes to the paramed. So when you take the application and you call the paramed company, you can just let them know that this is exactly what the client needs. So I'm going to scroll up to the guts of the policy or the tabular detail page that will show you your ongoing premiums, your anticipated dividend, the increase in the cash value amount, and then the total cash value. So if I'm working with this particular client, I can tell them that in year one, once you pay your total annual premium of $10,000, you'll see what your annual anticipated dividend is, and you'll see that even in year one, you've got about 63% or 64% of cash value back into the policy. And of course, you'll see the ongoing death benefit here. This policy pays for 20 years at a consistent $10,000 until the term rider falls off. Your premium drops a little bit to, actually the difference is going to be the difference in the term premium. Then the policy continues to kind of fluctuate because it avoids MEC for a couple more years, and then it goes down to all base. And since this policy pays for 30 years or to age 75, whichever is longer, the premiums completely end at year 30. So you'll see no other premiums are needed on the contract, but it does stay in force to maturity at age 121. So I'm sure you have a lot of questions about our illustration that we're happy to answer over the phone or whatever we can get to on this presentation. But I'm going to go directly to our accelerated death benefit plus rider values. This is what Brendan touched on earlier in the presentation. This shows the client right up front the amounts that they're entitled to if they're experiencing one of the triggers that are listed. So I like to point this page out because if you have clients that are adjusting their incomes or putting additional funds into this policy to work on debt reduction, they might be a little concerned that they're putting all of their money away in one place, and they may be a little nervous that if something happens later on, they may not have a place to go to access funds. Well, you can reassure them that this policy with LafayetteLife at no additional premium comes with these chronic illness, specified medical condition, and terminal illness values that if they do need to access, we've got their back. So for instance, if the client at age 60 is unable to perform 2 of the 6 ADLs, they would be entitled to a lump sum of $182,594, no questions asked, and they would still have a remaining death benefit of $124,629. So you'll be able to show your client all the way up through maturity how the rider works. So even if it's something that happens to them after the premium paying period is complete, you can see that the client still has value available. So of course, the longer they keep the value in the policy with no loans, then the value is there. Now, if they do take loans, because this is a debt reduction philosophy, if they do take loans, they're still entitled to the rider values. They just may be a little different. So just keep that in mind. So that's our illustration in a nutshell. And from here, I think I'll turn it back over to Brandon.
Yep. And then just real quick, Dina, before we hop out of this, I'm going to show them how to get the XML data out of here. And
Okay.
So I will take over from here and we'll jump back into this. So if you're working with the YFB software or anything like that, you want to say, hey, this illustration looks good. I want to get it back into the software here. Here's what you need to do. So you want to make sure that everything looks the way you want it to look. And then you're going to want to hit this Export to Excel button here. It's going to have this big blue loading bar down here at the bottom. And then eventually you're going to get this box that pops up. And it usually works a lot quicker, but we are in a home office here where we've got a lot of firewalls and a lot of all kinds of good stuff blocking it. There we go. You're going to get this box right here. This is going to be what's called your XML data. So when you see this box, it looks really weird. Just note that you don't have to worry about anything down here. What you're going to want to do is hover over this LLINS code right here and hit Save Target As. So when you hit Save Target As, it'll give you all this gibberish down here at the bottom here. You'll want to make sure that you save it to a place where you can go find it. And you can actually hit, let's just say valued client. And it is saved. So that XML data is saved to your desktop. What it'll look like if you run a standard version of Windows like I've got here is you'll get this lovely button right here. And when you open it up, it freaks out, gives you that same box. A couple different things you can do with that. Dina, I don't know if that goes directly into the software, but if you need to do one more additional step of putting it into Excel, here's what you would do. You would...
Let's open a blank Excel sheet.
Yeah. Apologies, I'm not using my computer, so having a little problems there. Oh, Microsoft Office, that's what that's under, right? Yeah, there we go. So you'll have a blank Excel sheet. So what you can do is you can just drag this sucker in there, or you can go find it. You'll get this as an XML table. Please select how you'd like to open the file. You'll hit as an XML table, and you'll hit OK. It'll give you this other box here that'll say the specified XML source does not refer to a schema. Haven't figured out what a schema is yet. Don't really care. I'm going to hit OK. There you go. There's your information.
So this is what you would typically load into the YFB software so that you can communicate with your client. Just know that the illustration has to be complete and in the order that your client wants it before you create this Excel spreadsheet.
Right. Thank you, Dina. And so with that, that's all you would need on that portion there. Another way you can do that here is if you just want to go through your normal process here, you can hit open and you can go find that file on your desktop. Hit valued client here. It'll open up the same way as an XML table for that. So just know that there's several different ways you can actually get that file open onto that. So with that being said, let's hop back in here to our lovely PowerPoint and we will go through the slideshow. So after waiver of premium, I want to talk a little bit about the application process here. So first and foremost, the application's got to be submitted. You can submit that via IGO e-application, which we'll show here in a second. You can submit it via fax, mail, or even direct upload. So you can email that over to our icenter@llic.com. That'll be the email you can send it through if you want to email it to us. Once the application is received, you're going to get confirmation that it's sent if you submit it through IGO, or it'll actually show up on your Book of Business tab. And I'll show you that Book of Business tab here in just a few seconds. New business reviews, they're going to review the application and they're going to order the requirements. You are actually going to be on the hook for the producer. You're going to have to order the paramet. So The good thing, though, is if you call Exam 1 or APPS, they have all of our underwriting requirements, so you just have to tell them that underwriting amount that was listed on the illustration that Dina showed you a few minutes ago, and they're going to know exactly what to order. So they'll know if it's a paramed, if they need financial history, all that stuff. They're going to know exactly what to order there. You can then log into the agent website to check your pending cases, but just know that the underwriter is going to review the file and offer a rating upon receipt of all requirements. So once we receive everything, the underwriter is going to come back and say, hey, the best we can do is super preferred, the best we can do is standard. It's going to be anything that comes up with all that. The good thing about Lafayette Life is you can call our underwriters to discuss cases. Our underwriters actually work here in the home office. They're not working remotely. They're not working from home. They have to put on a tie or a business suit just like I do every day, come into work in downtown Cincinnati. So you can always call them. They're really good about reviewing emails or phone calls, either one. The big thing that's a little bit different with Lafayette Life is once everything's all done, you're going to get what's called a synopsis email. That synopsis email will be sent to you directly. We hold off until we hear yes or no. So you're going to get this synopsis email, and if everything looks good, all you have to do is literally just hit reply and hit yes. That's good. If you want something changed, you can just reply and say, no, this doesn't look right, and then you can work with your internal wholesaler, Dina, or your new business rep, and we can get that all squared away for you. But the important thing is that you just respond to that synopsis email. Once we get that response, we'll get everything ready to go for you. Last thing here is that the pending business, this is what everything will look like here. This is going to be what it looks like on your book of business here. So you're going to have pending business, your enforced cases, your terminated, and then all cases that are on the record here. So if you have pending business out here with us, it'll pop up your agent name and your insured name. And if there's something that's actually outstanding, you can click this red question mark and it'll tell you what's actually outstanding on the policy here. These buttons over here actually refer to sort of like a file system, and if you click on that, this little section down here will actually tell you who's working on it, so you'll know who your new business associate is. Your underwriter, if you've got one, will be listed out here, and what the outstanding requirements are and if they've been fulfilled. So this particular case right here is going to be an inspection. They still need the inspection out there. But they also had some marketing and some motor vehicle reports that were fulfilled on 6/17 each way here. So if there's anything that's out there outstanding, just always know that you can actually go here to review that. If you receive a secure email, it'll actually come through here as well. This description will say new message, and you can click on it, and you can actually reply directly to the new business department here. So it might be reaching out just for a couple points of clarification. Final portions on the application process here. The policy is going to be issued and mailed once the producer accepts the offer. And once the funding requirements are met, the policy is made active with those funds available here. And then finally, last piece of the puzzle there is that you'll deliver the policy to the insured, and you're going to return those delivery requirements to Lafayette Life. So it might be a policy delivery receipt, might be a revised illustration, anything like that. Just know that our sales desk is here to help you through that process. So if you do have any questions about that, feel free to reach out to our sales desk directly, or you can call Dina, all that good stuff. We can walk through that. One other quick point of clarification is we do have IGO EAP. So if you've worked on that illustration, you like everything you see, and you don't want to do a paper application, you want to do something a little bit quicker, you can do IGO EAP, our IGO EAP system. So once you're done with the application, you can go from illustration and click on application here. And if you've actually done the application or the illustration, it'll carry over everything. So their first name, their last name, social security, or not social security number, but everything else here that's in yellow will be needed to be filled in here. So you'll see over here this green check mark. Once this page is complete, that will typically be represented by a red X, and it'll turn to a green check mark once everything is actually completed here. So once you move off this first proposed insured screen, this will actually elongate into everything you need. So if your client has some foreign travel coming up and you need to do that foreign travel questionnaire, it'll pre-populate. If they've got other things that are outstanding, if they've clicked that they're not a U.S. citizen, it'll come up with the citizen questionnaire test and everything like that there. Everything you need to remain in good order and to have this processed quicker will be made available to you here. And if something is needed, you don't have to go hunt down and search for the right form on our actual paper application portion. Everything's out here. Good thing to know is this is optional. You can do this. If you're more of a paper person, you can definitely still do a paper application. You can turn in business with us any way you like. We're not going to put any restrictions based on product, face amounts, anything like that. We'll do business however you want to do business. So with that, we just want to talk real quick about the LafayetteLife sales desk. So they're going to provide fast and valuable service and valuable answers while guiding you successfully through that process of placing business. And when you contact the sales desk, your call is automatically routed to by your area code to your personal internal wholesaler on the sales desk who knows your business best. So they're going to know exactly how you actually like to place your business. One of the things we talk about here with LafayetteLife is we're really high touch, and we know how you typically run your business. So the more you talk to your sales desk rep, the more they're going to know how you do your business, and the quicker it's going to be for you to place business with LafayetteLife. They can help you with case design, product illustrations if you need some help with product illustrations, any product and rider support. So if you've got questions on our waiver of premium, if you've got questions on our child insurance rider, anything like that, they can help you out with that. Support for EAP they can help you out with, and they can walk you through those underwriting guidelines and requirements and any sort of marketing support. So with that, here is their contact information. They can be contacted directly at 1-866-937-5542. So once again, that'll be listed up here on the screen here. If you're more of an email person, they also do check emails throughout the day. So there's no 1 or 2 day turnaround on emails. This is actually managed by somebody on the team, and they will divvy that out. So you can always send an email to LLICsalesdevelopment@LLIC.com. So with that being said, we've got a couple minutes for questions here. And I see we've got a pretty full box out here. So let me hop in and take a look, but I will leave that out here as an option here. Are all of these going to be fully underwritten? Yes, everything that we've talked about today is going to be a fully underwritten policy here. So what I'll do is after this webinar here, I will send out our underwriting requirement guidelines to Logan, and she can actually send that out to you. And then you'll also get a follow-up probably from Dina, and she'll have that out there as well. I do see a couple questions on commissions. Just to let you know, I'm the product person, unfortunately, here at Lafayette. You'd want to go back to your upline to talk about commissions. So they actually keep me out of all of that. They don't want me to know any of that good stuff out there. All right, XML data and Excel on Max. The best thing I could tell you here would be to give Dina a call or our sales desk a call, and we can do a go-to meeting really quick, and we can take a look at your XML data and see how that transfers over. And then we can show you the best way to get that put into your actual Excel doc. Okay, so I see, can you do an EAP for your first application to your company? And do you need E&O insurance to sell your policy? Absolutely, you're going to need E&O insurance. That's going to be a requirement of having a contract with LafayetteLife. So I would contact your upline just to get those requirements. But as long as you turn your contract in and you get an agent code, you can definitely do EAP on your first case. Absolutely, you're not going to be held to that. How do we access paper apps to write policies before producer issues are numbered? So let's hop out to the main page here. So in order to find our applications and everything like that, you'll come back here to your main screen here, and you'll see this Forms by State button here. So once you've gotten to this Forms by State option, you can run anything here. So since I'm sitting in downtown Cincinnati, I'm going to click on Ohio. And if I'm going to run out here and go take an app out on the street corner before I head to lunch, 1459 is what you'll be looking for here. This will be the application for individual life insurance. You'll click 1459. You'll hit open. And boom, there you go. that is your application packet here. So you'll have everything out here. You've got your FOS insured information, everything like that. We do have a sample application that we'll be sending out as well, so you'll know exactly where everything needs to go here. If you do need anything else, like let's say that your client is a big scuba diver, that's always one of my favorite ones to look at here. You will, if you do a paper application, you're going to have to go look up that information here. It'll tell you what you need, but you'll have to go find that. So here's our supplement to the application, Skin Scuba Diving Questionnaire. All right, here. Do you have any simplified issue products? Absolutely. We have what's called the Protector 15 Simplified Issue. That's going to be typically used for final expense products. We don't illustrate it, unfortunately, but we do have an agent guide that you can go find, and it'll actually show you our rates. So if you come into the sales materials and tools, you'll come down here to our life insurance products. You'll find about halfway down the page this Protector series of whole life products here. You'll get our agent guide. It's got this lovely family here on the front, plan patty cake on the second page here. It'll go through all of our requirements, and then finally, you'll get to our actual rates here. So if you've got any questions here, you can always consult this, or you can give our sales desk a call. We got time for about 2 more questions here. So let's take a look before we wrap up. In order to sign into the website and create a username, do you have to have an agent code first in order to access the paper app? Yeah, so if you wanted to sign in here, just give the marketing department a call, the sales desk a call here. They can actually pull those paper apps for you. And if you don't have your agent code yet, they can pull those for you. If not, they can also walk you through how to find that here. I see a couple more questions out here. But we are running short on time just in the interest of that. So what I'll do is I'll pull these questions here and I'll send out just like a quick Excel spreadsheet with the questions I can answer. I'll answer those. And if I can't answer them, I'll let you know that as well. So with that, Logan, I very much appreciate you letting us join your call today. With that said, if you have any questions, once again, let me display that LafayetteLife sales desk number here. You've got LLIC sales development at LLIC.com, or you can reach out to us at 1-866-937-5542. Once again, I'm Brandon Hamilton. I was joined today by Dina Evans, your internal wholesaler, and Bobby Kincaid, the sales desk manager here. So if you have any questions, feel free to reach out to us. Just wanted to say we very much appreciate you joining the call today, and we look forward to doing business with everybody. Hey, thanks everybody, and have a great day.